Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. For the next few minutes we're going to be looking at silver, specifically the SLV ETF. Right then, let's get straight into the count. I'm saying we topped in a wave 1 on the 10th of August 2020. Since then we've been in a 3-wave correction. 3-wave move here, 3-wave move here and a 5-wave move in the C. Let me just show you how that looks. Like so. Now, if we're complete, then we completed with a diagonal, 5 waves in the C, which makes this a running flat. Now, if that's the case, and we can see running flats in wave 2, so that's fine. And if that's the case, then we've seen the C complete before the bottom of where the A finished, and we saw the B expand beyond where the A began. Now, normally, the more common flat pattern we see is what we call an expanding flat. And we tend to see the A come down, the B go above where the A began, and then the C come down beyond where the A completed. That would be more typical. But in this case, we get what we call a running flat, which is the A comes down, the B expands, the C truncates, essentially. So we end up with a higher position than where the A completed. Now if that's the case, then really simply we will come up and we will break the previous high and we will be off to new highs with silver in pretty short order. Now if my voice starts to go during this video, that's because I've still got a bit of a cold and my throat is still playing up a bit. So as I'm sure you've no doubt noticed from my recent videos, so just keep that in mind if that happens. Now what we're looking for here then, if we want to be bullish and say that this has completed, is all we're really looking for is some kind of 5-wave move up to confirm a new trend, and then some kind of 3-wave pull back to buy. Now you can buy the breakout of this diagonal pattern if you want. I would personally prefer if I was trading this, although I'm a bit of a hypocrite here as I am a long-term, I wouldn't say hoarder, I'm no Scrooge McDuck, but a long-term accumulator of silver and gold. So I've been using all opportunities throughout the last few years to accumulate gold and silver gradually. Now if I wanted to trade this, I'd like to wait for that 5 up, 3 back, get in, and then off we go, in which case we'd be looking to set the stop at the bottom of our proposed wave 2 completion, the C leg of our 2. This would become our stop in case we were wrong, and then we would get stopped out as the price moved lower. If this is bullish, you will not see that low get taken out. Excuse me. Right then, so let's assume that's the first way of looking at it. Running flat, it's complete, silver's going higher, looking for a 5-wave move up, 3-wave move back, get into the trade, stop set at the bottom of the 2, off we go into the wild blue yonder, nice and easy. So that's the one way of looking at it. Another way of looking at it is that this is a diagonal, but it's not the completion of something, it's the start of something, in which case the 2 comes down significantly lower. I've always liked this node of volume here and the volume profile, as it coincides with the, I think it coincides with the 61.8% retracement of the wave 1. Let's have a look. Yes, it does. Here's this little hump down here in the volume profile. Here's the 61.8 and 65 right around this point of control. So if we were bearish and we were still waiting for a wave 2 to complete before a gigantic wave 3 higher, then we would count this as a leading diagonal. And we would simply say 1, 2 before this high, 3, 4, 5. However we get down here, we would get down here in 5 waves to complete the C. Now the whole thing could be an ending diagonal on a larger scale, if you take my meaning, or it could be a pure impulse. Okay, because wave 3 has to divide as an impulse, wave 1 can divide as diagonal, okay, and wave 5 can divide as an ending diagonal or an impulse. So we could have completed, about to go higher, or we could have just started a greater move lower. Unfortunately, it's no obvious way of knowing. Okay, but we do thankfully have some simple levels, don't we? If this is the bottom of the C and therefore the bottom of primary 2, we've just talked about how we set up a bullish trade. We wait for 5 up and 3 back. We use this as our stop, and then off we go. If you were able to count 5 waves up and 3 waves back on a smaller time frame, you could already be in the trade with the stop set at the bottom of this too. So it's all down to personal risk, but this would be the basic setup. and then we will break this previous high. Now if you're bearish, then we're looking for a retracement trade to get in on this. So from the top of this, the B wave, we'd be looking for a wave 2, 3 wave move. Could already had one wave, could have the 2 waves, and waiting for a third move up towards the 50 or the 61.8 kind of area, and then we'll break down lower. In which case you could do the reverse, depending on your personal level of risk. Obviously, we could call the top your stop, and you're out the trade if it goes higher. Pretty large margin, unfortunately, there, having to take on a bit of risk, but it's very much down to the time frame you want to trade. If you want to trade a smaller time frame, come down to the 4 hour, 2 hour, 1 hour, 15 minute, look for your 5 waves up if you're bullish and 3 waves back, and if you're bearish, you're looking for 3 waves up from this 5 wave move down, and you're looking for it to complete some kind of reaction from it, and then you want to get in short and place your stop as you feel fit. But the invalidation point for a short trade would be the previous high of the B wave back here at 28 bucks roughly, and if you're bullish, the invalidation point would be down here at 22.14. If we came down through there, we would be heading lower. So that's it. That's the Elliott wave count as I see it. This is either a leading diagonal or 5 waves down in a C, and we're having a big expanding flat pattern, which would look like this. Okay, and then we could just check what kind of extension we'd be looking for. I think I've done this before, but let's just run it again. Yeah, the 1.618 completion down here for the wave C would be right in this volume node, right around the 61.8% retracement at the wave 1. So if I was being bearish, that's the nicest setup there is. A nice clear expanding pattern going to target with double confluence down here on fib levels. If we're bullish, then we've just completed an ending diagonal, and we've got a wave 2 completion here. We're heading higher. We will take out this previous high. The only way we could be certain would be to look into the subdivision of all these waves, but because of the gappage in the chart, it's very much down to personal interpretation. If this is an ending diag, we would see a series of 3 wave structures. Okay, if this is a leading diagonal, we see a series of 5 3 5 3 5 structures, or 3 3 3 3 3 structures. Now, my personal take on the count is that I can see 5 waves in a 1. I can see 3 waves in a 2. I can see 5 waves in a 3, 3 waves in a 4, and I think 5 waves in a 5. So my personal bias, believe it or not, even with this breakout, is still a bit bearish. Purely because this fits a leading diagonal better, but I'm sure if you dig into this with all the gaps, you could probably dig out a series of zigzags. Like, you could say that the 3 here divides as a zigzag with a 5-3-5 move. Okay, or you could count it as 5 waves, 1, 2, 3, 4, 5, like so. So it's down to personal interpretation. The chart, unfortunately, on SLV is not very clear. So we could see it as either a leading diagonal into a 1 and into a 2 and lower, or we could see it as an ending diagonal into a C and we complete. Either way, we've got our 2 levels, and we've got our way of setting up our trade either way. I'd also argue that perhaps this is a 3 wave move here rather than a 1, 2, 3, but we'll know soon enough. If we get an extension in the 3, it will bring us higher. A 4 and a 5 will take us to new highs. If this is a 3 wave structure, it will roughly run to 1-to-1 parity, and then it will turn around and head lower. And that's it. That's how I see the Elliott wave count. So let's wrap up quickly with our basic technical analysis. See if there are any clues that we can add to our count given the basic analysis. So we're just going to turn off the Elliott wave for the moment. We're going to bring in a 10 exponential moving average in yellow, a 20 in blue, a 60 in orange, and a 250 in green. Right, we're going to also bring up our RSI set to a 10 close, green 30 level representing oversold, red 70 level representing overbought, and also our MACD with a 10 for the short term moving average in blue, 20 for the long term moving average in orange, and a 9 to smooth. So what can we see here on the daily time frame? Let's have a look at the weekly first. Okay, so coming all the way out to the weekly time frame, we can see a move back above the 10 and the 20 exponential moving average. We've seen this before during this corrective phase. We've seen how the 20 has been strong support the whole time. Was tested here. We did come down and actually get a candle close below the 20 for the first time in all of this move, which I took as quite bearish at the time, but we've since had this move up, confirming that diagonal pattern. Above the 10, above the 20, above the 60, above the 250. Right, RSI is in neutral territory between 40 and 60. And MACD is showing potential return to bullish momentum, short-term moving average curving up, ready to cross over the longer-term moving average, a fall off here of bearish momentum as the bars on the histogram shrink and lighten in colour, so potential bottom in place. Want to see a 5-wave move up and 3-wave move back, and then a continuation of this move up confirmed with bullish momentum on the MACD, on the weekly time frame, and on the RSI moving up towards overbought conditions. And then I think that would be pretty clear confirmation if you have a bullish Elliott wave count develop. On the daily time frame, we are above the 10, 20, 60, 250 exponential moving averages also. The 10 and the 20 curving back up. The 10 has crossed over the 20 with the price above it. If the 60 crosses over the 20 as well with the price above it and closes as such for the week, I would take that as fundamentally bullish. So more likely that this was the completion of something and we're heading higher. We do have a move from oversold towards overbought. It's coming all the way down to oversold conditions to complete that 5-wave move and then bouncing from it. That's also quite bullish, and that's also a pretty strong signal. We have a return to bullish momentum here, green bars on the histogram, another bright one here. Short-term moving average moving up and away from a longer-term moving average, so this looks bullish also. So strong support from technicals at the minute to suggest that we may have bottomed. We have broken that bearish trend which was set by that diagonal pattern. Often the case when we see diagonal moves like we have here, you get, sorry, I don't need to draw a line, I've already got one. You get this bearish descending trend line, which is the top part of the wedge of this overlapping structure of a diagonal. This forms resistance all the way down. That resistance is now broken, and therefore, as we discussed earlier, that resistance is either heading in a 3-wave structure into a 2 before failing and coming back down, or it's coming up in a 5-wave structure into a new 1, down into a 2, and then up into a 3 and beyond the previous high. And that's how I interpret the basic technical analysis at the moment. So there is evidence to suggest we've bottomed here. We've got a return to bullish momentum of a day time frame, moving back into positive territory on the MACD just above the zero bound. We've got moving back towards overbought conditions, so the overbought conditions would likely coincide with the completion of an initial wave off of the low before rolling over into a 2 and heading higher. Now we just want to see it on the weekly time frame too. We just want to see on the weekly time frame the same bullish crossover, the same return to overbought conditions, and then bringing ourselves up into that 1, 2 and 3rd wave extension. So although my personal bias is still bearish for the short term purely because of the way I get the subdivision of this diagonal pattern, to me looks more like a leading diagonal, I am perfectly happy to entertain the idea that we've completed as well. So I will take whichever trade I think presents itself more strongly. If I get a significant move up towards the highs, but I get what looks like a zigzag or a corrective structure up here, you could take a safer short position near the highs with the stop at the highs. If I see a 5-wave structure clearly develop and I see 3 back, I will turn bullish and I will buy the retracement into a wave 2. So I'm perfectly flexible either way. The only reason on the long term I want to see the price come down lower is, like I said, this diagonal divides better as a leading structure rather than an ending structure, and also I'm greedy and want to buy silver cheaper. And that's my personal bias, and we all have one in our heart, so we might as well just be honest. Alright then guys, that's the way I see SLV. I hope you've enjoyed this technical analysis of silver. If you're new to the channel, please subscribe, smash the like, let us know what you think in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And before I go, I'd like to thank all my patrons. Your support is greatly appreciated. If you yourself are interested in becoming a patron, there's a link in the description box below. You can go and have a read of the tiers. There's lots of interesting benefits to get as a patron, including Discord access. If you are considering it though, maybe leave it till the start of the next month, as you don't really want to get charged twice. But I have recently put out some exclusive content on there that you might be interested in. but it's totally up to you. I also have a Twitter feed that you can follow, link also in the description below. Right guys, take care of yourselves and I'll be back with you soon. All the best, bye bye.